The way is in training. Miyamoto Musashi. That is what we are all about here. We're about training every single day, 10 to 15 minutes following the markets. 4 ETFs that we track, the S&P 500, the NASDAQ 100, 20-year bonds, and gold. For those who are listening to the podcast, I'll tell you what is being seen on the video that we send out every day to everyone who subscribes to our daily market review. If you are following us on YouTube, please make sure to subscribe. We appreciate that. We love your comments. Also, now, what do we have on the screen? I spent a lot of time today not doing other things, but going through the weekly vertical crossover profit potentials through the end of July 2019. I know it's the 30th. We still have one more day, but it is amazing to look at what we have achieved this year. I have gone through and tracked all of them. In fact, I am not going to go over all of this right now. I explain everything that's on this sheet in a video that will be attached at the end of today's program. You'll see it in your show notes if you're listening to the podcast, or if you are watching us on YouTube, or if you have received our daily market review. I'm going to attach it there for you. But it is all about the magic of the weekly vertical crossover. We have entry points. We have the highs during the course of all that. We didn't have a single weekly vertical crossover without at least a profit of 2.76%. The highest profit was 16.80% during the fall-winter trading zone on the NASDAQ 100. Did I say zone? We also had another good one at 11.52% on the S&P 500. And then probably the shortest time period for the most profit, I saw that earlier, and I'm not sure if I think it may be that last bump up in gold. Might have been over the course of just a little over a month, 8.90%. But folks, please study the weekly vertical crossovers. Pay attention to what we talk about here every day. Now, there are a lot of caveats for entry prices, highs, exits, all of that. We're not a stock calling service. We're an education firm. What you've got to learn is how to apply the weekly vertical crossover, learn entry points, learn exit points. That, my friends, is what it is all about. Using the weekly vertical crossover to maximize the potential, because, my friends, they are here. They are here. They present themselves week after week, month after month. If you want to create for yourself a virtual printing press of money, you're going to have to study with us. You're going to have to pay attention. You're going to have to practice trade. 10 to 15 minutes a day is all we ask. How long will it take? I don't know. A year, 10 years, 20 years. I don't know how long it will take you to master this. It shouldn't take that long because we lay it out with a silver spoon every single day. But you've got to practice. You got to be with us every day. You got to learn these charts. You got to understand what it is we do. Enough said. Let's jump into what we're all about. We're going to jump into the S&P 500 on the weekly chart, as we always do. Now, as we look at what is happening with the charts, we see that stocks are down for the day. Bonds and gold are up. Now, as we look at what's happening with the chart, we can see that the high over the past week, 302.23, and 302.01 is the high so far this week, not bumping up as high as things were, starting off a little weaker. We are above the weekly trend line, but we see that the price percent oscillator is about flat. Derivative oscillators losing momentum. Now, could things be getting ready to bump up strong after a Fed meeting? That's possible. What's going on the 2-day chart? Well, of course, we have a completed candle now. It's a red spinning top, open box spinning top, not a strong down, solid red candle, but we can see the price percent oscillator heading down. Still positive, but heading down. Looks like trying to get toward a crossing over going down. Derivative oscillators also lost energy. What do we see on that 4-hour chart? At the end of the day, It did recover some, but there was enough momentum that the price percent oscillator and derivative oscillator crossed over going down. Price, however, is above the weekly and the 2-day. So pay attention. We're still in the zone for potential up movement, even though the 2-day is awfully darn weak and the weekly is weakening. We see on the cues even more weakness. The high over the past week, 195.55. The high so far this week, 195.18. So it's not bumped up as high as the prior week. Now, on both the S&P and the NASDAQ 100 QQQ, we see that the box, as far as the candle itself, is bigger, well, is higher than the prior week, but we just haven't reached a higher high. We do see things a little stronger on the NASDAQ 100. We are actually heading up. Derivative oscillators gaining upward momentum. 2-day chart, again, showing some weakness. Red spinning top. Price is above the 2-day and the weekly, but is heading down. Derivative oscillators weak. We go to the 4-hour chart. Same kind of thing, big down candle in the morning, bit of recovery in the afternoon above still the 2-day. We had that crossover going down in the morning, not in the afternoon like the S&P. So again, things are still primed for a potential jumping in point and for staying in if you jumped in at a point. But again, just pay close attention. Continue to watch that 2-day and that weekly, because there is some weakness there. These are not strong trends that are continuing to just hammer up. Now back to the weekly, we go to 20-year bonds. We had that weekly vertical crossover going down at the end of the week, didn't we? What do we have so far this week? A green spinning top. Actually, again, when we look at the high over the prior week, 132.49, high this week, 132.10, so it's not bumped up as high, but we do have a green spinning top, means indecision tending up, price percent oscillator still down. Now, we talk about Monday morning quarterbacking, looking back in time. What has happened in the past? Well, we see a week where things crossed over going down back in May of 2018, crossed over and then popped back up. Is that possible with what's happening? It is. Could the Fed's decisions affect that? Could. What would typically happen with bonds, though, if stocks start accelerating? Might bonds go down? So again, let's just watch and see. Again, we haven't been betrayed this year on a weekly vertical crossover. So we'll continue to hope. While I breathe, I hope. I believe that's a state motto. I believe that's South Carolina's. Anyway, we see that the derivative oscillator is gaining downward momentum, and the price percent oscillator on the weekly chart still headed down. What's the 2-day telling us? 2-day is still headed down quite nicely. Derivative oscillators losing downward momentum, but still negative. But we have a green open box candle with a wick on top. That's the last candle there, pushed through the 2-day trend line. However, still negative. So again, and when we look at where things pushed through, they didn't push as high as the last green candle, but again, they are higher than the prior candle. So again, we'll pay attention. We still have the strength of that weekly vertical crossover going down. We'll see how that plays out. We look at the 4-hour chart, and of course, we see it gaining momentum in the morning and then leveling off in the afternoon with a doji, meaning lots of indecision tending down, but that price percent oscillator still going up, derivative oscillators gaining upward momentum. Price has pushed through. It did in the afternoon on Monday. Well, yes, it did actually in the morning on Monday, push through the 2-day trend line. We don't have a weekly trend line yet because we just had a weekly vertical crossover. So again, pay attention, watch. If and when we see this crossover going down, that 4-hour chart starts to hammer down and crossover, that would be your jumping in point for something like TBF, Tango, Bravo, Foxtrot. That is the inverse fund for TLT. I'd like you to practice trade that, or do what we did in the video I was just telling you about. We recorded where we just kept an account of the jumping in point and then the jumping out point for a down move. Of course, it's going to be negative if you jumped in at 131.67 and you sold at 127.67. Of course, you've got 4 dollars of loss there, but that's actually gain in an inverse fund. And again, the percentage is going to be about the same. If you don't know what I'm talking about, watch our video, Inverse Funds, How to Make Money When Markets Crash. We explain it better. There's also a double inverse of TLT that I don't recommend that you look at. Don't get super greedy. That is TBT. You could sure, if you want to be greedy, you can try that, but TBF ought to be good enough for you. So again, prepare, get ready to do that if indeed this sets up like all of our other weekly vertical crossovers have done. But again, we've seen in the past where it doesn't work, and if it doesn't, it doesn't. So no harm, no foul. We don't have a jumping in point yet unless you were following things yesterday on the 30-minute chart and jumped in. And again, things are still looking good on the 2-day and the weekly, so we'll continue to pay attention. Now, let's look at gold. What's going on gold? We see on gold that we're up for the day 0.33%. And on the weekly chart, we are, again, we're below our weekly trend line. Price percent oscillator, however, is moving up again, actually stronger than it was in the prior week. Derivative oscillators losing momentum. We go to the 2-day chart. What do we see there? We see price just barely pushing above the weekly trend line, but that's not bad. However, we are still in a confirmed down move on that 2-day chart. Remember, 2-day chart crossed over going down back on Wednesday, the 24th of July. Derivative oscillator still negative too, so we don't have a trade in gold. We're waiting for enough up movement to pull that 2-day chart back up into the positive range. We go to the 4-hour chart. What do we see there? Well, we've had 2 days of up movement in gold and ended the day with a crossover on the 4-hour chart going up. And again, got to have that 2-day chart rotate over until that happens. We are not in the area for a buy-in in gold. Folks, that's where we are as we end the day. I'm excited about that newest video that we've gotten out, that we have available for you. So again, look for the link in the show notes and enjoy. We'd love your feedback on it. God bless, my friends. Oh, if you haven't purchased our book, 11th printing, we have a few copies left. If you want to supercharge your training, understand what it is we do here, have your own book. I'll autograph it for you and send it right out to you. See the link in the show notes. Don't forget, also in the show notes are the daily market worksheet, weekly market worksheet, and trade worksheet. There are also trainings at the website on how to use those worksheets. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.